Ladies and gentlemen, welcome to the Daily Update. My name is KK. I'll be analyzing this market with you this evening. Market is up about 0.6% on the S&P. We actually saw a negative performance on the NASDAQ, I think down 1.3% or so. But we did see Russell 2000 up about 4%. And the banks, XLF, is up about 4.3%. And energy is up about 3% there. So we did see, and Dow I think is up about 1% if I'm not mistaken last time I checked. So we're continuing to see this great rotation occurring. We've been talking about this for several months now that, what happened was last year after COVID, those large tech stocks really got up, performing like 40% year to date, 90% since the March lows. So what we're seeing since early, December and early, mid-November or so, tech stocks just been moving sideways, just grinding, and letting the small caps and the banks to catch up, right? And so that theme has been continuing, and we're seeing today that only selected sectors are up, while a lot of these tech stocks are down, and that's not a bad thing. That's a good thing. Market is balancing itself, is propping itself up, because we don't want the tech stocks to keep going higher, right? Without ever pulling back, without any consolidations. We need tech stocks to take it easy and We want tech stock to take it easy, take breather, right? Take some rest so that lagging indices and lagging sectors such as Russell 2000 and the bank sector can catch up. And in that process, we could see this market kind of balancing itself and get into a healthy uptrend, right? So this is kind of what I've been talking about. If you've been following me last year, when the tech stocks start soaring, instead of chasing those, why not focus on the lagging sectors, lagging stocks, right? And so, and Russell 2000 and the banks are heavily down. I remember at one point last year, and obviously Russell 2000 pretty much caught up already. It's actually outperformed the S&P last year, and so far this year, right? Banks caught up so much. It's not too far from the new all-time highs. We saw Goldman Sachs making new all-time highs. So you can see all these bank stocks are coming up here. They're up quite a bit today, 5%, 6%, 7%, right? And this is a good sign, right? This is a good sign that these lagging stocks to make a move while these leaders are, resting and pausing and just kind of consolidating. And that's exactly what you want to see if you want to see this market continuing to march higher as a whole this year, right? And so we'll talk more about all this on the weekend analysis, but let's just stick with the 65-minute chart spider analysis today. So this is where we closed yesterday, right? And we talked a lot about my short-term moving average here, right? Short-term moving average, this was what happened on, this was Monday, right? And this is where it closed yesterday, and this is today's price action today. So what we talked about this week is that we wanted to see the buyers, the bullish price action to reclaim my short-term moving average, right? And we did that yesterday. I'm just following up with what we talked about yesterday. And an entire battle was fought here. So once we saw price reclaiming my short-term move, that declining short-term moving average, and stayed up above it in the first 2 hours yesterday, and then we saw 3-4 hours of rally there. This morning we came into the market. We talked about this market potentially because you see, talked about the tweezer bottom, right? And this market getting back, and because obviously market doesn't go straight up, it likes to go up and down, right? So makes a move, pulls back to where? right? First reclaim that 20 or that short-term moving average, and then retest that short-term moving average as a new support because it was resistance prior to it, just like here. And then now that's what happened. And it was much, much faster action today. It wasn't like this for days where we were grinding above that short-term moving average. But obviously, the overall process is similar. We come down, we see a sharp pullback, we see bullish reversal candlestick patterns. And then once we see that, we want to see the price reclaiming the short-term moving average and getting up. And at some point, it likes to come and retest it before making another higher high here, right? So we whatever we saw back in late December, which it took a couple days to do, it all happened in just 1 hour, right? Because what happened was we actually gapped down right to that short-term moving average, right? It is no coincidence, it is no mistake that it decided it's going to come down and retest it for a second there with the gap down today. And then out of nowhere, you can see there's a big Marubozu candle there, pushed it up, and it kept rallying until the 5th hour. So 5th hour, we came back, pulled back, and then a 6th hour, we just kind of hung around there. Good news is that we're still above the short-term moving average, and short-term moving average is rising as of today, and we do have higher lows in cultivation here, and that's the high, and we got subtle higher high there. So as long as we're in this, or the market is moving in this fashion, in this manner, we want to give benefit of the doubt to the buyers, and I want to give benefit of the doubt to the buyers in the short term now that my short-term moving average is rising. Let's kind of zoom out here. Maybe we get a little bit of better picture of the, let's actually look at the midterm here, because I don't think we've looked at midterm this week. So we've been tracking this rising pivot here, right? Well, actually, that's not a pivot, that's a support. So we got the rising support there, not to mention my midterm moving average. And we talked about this entire time since November. As long as we're above my midterm moving average, we want to continue to give benefit of the doubt to the buyers. Even if you see these sharp corrections, not to get into an emotional state or get into a dramatic conclusion just because we see 1 day of sharp decline, because it's going to take more than 1 day of sharp decline to dismantle an uptrend. It's going to need more than that. And so, and to be able to guide us in that, we keep track of this midterm moving average here. And so at some point, price came down and retested midterm moving average here. And then we did that again on the 31st, right? And then we found support here, and we are continuing to what? We're continuing to cultivate higher highs here, right? It's the subtle higher highs, but we're continuing in that, right? We're continuing in that. We're continuing to build this sideways uptrend type of move in a tight range. I mean, at some point, market is going to break out, right? But for now, we're going to continue to give benefit of the doubt to the buyers in the short term and the midterm and the long term. Let's check out that oscillator here. Before I go to oscillator, so basically for tomorrow, because I forgot to cover what you can potentially expect tomorrow. So tomorrow, if this thing decided going to continue lower, we have that, what I'm going to do, I'm going to put in level right here. And I think this is important level just because this is a level that's going to be where it's going to turn into a pivot, right? I mean, it's already kind of a pivot. It's a support, and then it acted as a little resistance there yesterday, and then we gapped down from it, and then we thrusted above it. If this thing's come down, that's the level of that pivot support at 371, 370, and it's coinciding with the level with my short-term moving average. So this is the level. You know what? I'm actually going to do this just a little lower. I'm going to try to accommodate this low. I'm going to try to accommodate this low right here, this guy right here, because that's where we find support. So I think overall, bulls want to protect this level. So 370-ish. If we can do that, and I think that's also 50%, right? You see a move, That's exactly that 50% in the last level of fib. Basically what the fib is telling us is as long as we stay above this level, this is still considered in the short-term higher low. That's kind of what he's saying, right? We got the low, we got the high. If this thing comes down, bounce at any of these levels, it's going to be still considered a higher low before making higher high there. So 370, 370-ish, 371-ish level to protect for the buyers to continue in that momentum. Let's check out that oscillator. Oscillator is still got some room to move here, right? So you can see if we just kind of pull back and zoom out, you can see that buyers actually like to bring it all the way up to the top of his span every time we see a cross. Almost every single time it goes all the way back up, right? So you can see where we're staying at right now is here. That's where we're staying at. So that means buyers are not fully tired. They have room to move. That means tomorrow buyers can actually still make a run to the upside. The best case scenario is probably gapping up because that candle right there, that's a doji candle. And that doji could be a resting candle or reversal candle. If we do see a gap up, even slightly gap up, it might help. And then, you know, start gapping up slightly above it and start making a rally. That doji might become the reversal doji before making new highs there. So let's come back tomorrow. We'll re-examine. We'll go from there. Enjoy your evening and good luck trading tomorrow.